Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, the 19th of April, 2007, and the markets closed. The S&P 500 finished with a gain of 3 cents on the spiders. And once again, this market is overbought, but it continues to confound the short sellers here. The market broke out past these highs just about 3-4 days ago, and that level is held as support so far. So the market continues to act very strong. However, today I did notice that the advanced decline line, there were 1,100 advancers for just 20 and 2,000 decliners. So internally, maybe we're seeing a little bit of distribution. And also, I think that I wouldn't be as thrilled about this breakout to new highs if it hadn't come after we've already seen such a large move higher. So I think that we still have to be very careful in this environment. We've seen a couple of these big companies that have reported earnings, like Research in Motion, and then eBay got smashed. And think about those people that bought that stock after the close, up at 36 yesterday. Dangerous game plan after the close if you're going to do it. Use a tick chart and just day trade it is what I would suggest. But basically, we've had a lot of stocks failing, so I think that gives us reason to be concerned and continue to be cautious in this environment. If we look at the 30-minute time frame, you can still see we've got an advancing 5-day moving average. The market did gap lower and then finished with a gain. So we saw the buyers come back into the market again today, and they came in right here where we had support earlier in the week. So this level right in here, where I've drawn this little trend line at about 146.5, is probably the most important level of support right now, because we've seen 2 tests of that this week, and it's also where we have that 5-day moving average as well. A break below there, perhaps we're going to see a test of the lower end of the range down there for 146, where we gapped up to the other day. But for now, a 146.5 looks like the better level. Today we did see a lower high, so that's just one more little thing to be concerned about. But as long as this short term, the 5-day moving average, is trending higher, we're going to continue to give the benefit of the doubt to the buyers, although cautiously, because we've got all this distribution action in here indicated by those crossing and moving averages. The Nasdaq 100, the Qs, these guys finished with a gain as well, up 14 cents. We don't have the highs in here yet, and that's not a call for new highs. I should say we haven't seen them confirm what we've seen in the S&P 500, basically. But the Nasdaq 100, we are seeing it stair-step higher. This prior level of resistance at about 44.75 is acting as support. That's also where we find the rising 10-day moving average. And this market finished, like I said, with a 14-cent gain today. So we saw an initial gap lower right down to that rising 5-day moving average, and then the shorts paid the price once again. So right now in this market, 44.80 looks to be the more important level of support. So that's what you should focus on for now. I kind of think that with options expiration tomorrow, these things will probably close within 10 cents of 45. Either side, 44.90 up to 45.10 or so. We do have a lot of earnings reports, big ones coming out tonight. ISRG, Google, of course. SIRF, I think, is going to be a big one as well. So those might have some impact on this trading as well. But for now, all we can trade is what we see, not what we think is going to happen based on earnings. And we've got this nice higher highs and higher lows. We've got the potential for some resistance up at 45.5. But when you look at the semiconductor action, things are looking a little bit more bullish in here. As you know, we've been looking at this frustrating range that the market's been in, but realistically, we broke past that level today. So if we look at the weekly time frame, you can see that if we hold up here on the weekly time frame, then it looks like we've got a legitimate breakout. We've got the 10-week moving average above the 20-week moving average, above the 40-week moving average. That equals the 50-day, 100-day, and the 200-day moving average. We haven't had all of them advancing since well over close to 2 years, actually, back in this area, and we saw a rally develop. So we have a nice base of support formed in here. And again, it's tough to buy after we've seen such a big move. However, if you look at what we were looking at earlier in the week and last week, what we started to notice was this inverted head and shoulders pattern. The way we come up with a target for that is to take the height of the pattern and add it to the breakout point, and that gives us our approximate target. So if we just take this line and move it to where we broke out from, you can see it's nearly obtained that level. In fact, what we were looking for was $36.30. We've seen a high so far of $36.24, so this market is approaching that level. What I'd really like to see happen before I could get confident buying semiconductors would be for a pullback, maybe even down towards 35.5. Let's take a look at the shorter term time frame. But you know, this market's just really set up very nicely. The way that this head formed with the double bottom in here, broke that pattern of lower highs and lower lows, and then we've seen, you know, these nice higher highs and higher lows in here. Then we saw the formation of that right shoulder, which actually, that right shoulder, you could say, also had an inverted head and shoulders pattern in it, but if you really want to microanalyze it. But we saw that breakout, and now we've got the rising 5-day moving average at 35. Ideally, I'd like to see a pullback at least down towards 35.5, and then look to see about buying the strength on a move after that level is tested. IWM, the Russell 2000. Now this market has been the leader for the last how many years here, as it's been in all-time high territory. But today, and in fact the last couple days, it's pulled back a little bit deeper than the rest of the market. Now the level of resistance that we'd been watching carefully was $81. So it continues to hold above that, but it's come down a little bit harder than the rest of the market. So just a little bit of reason for concern. We didn't get the same bounce in the Russell 2000 as we did in the other indices. So that just tells us this market has been the leader. So when the leader starts to break down, you've just got to be a little bit more cautious overall, and see what that leads to. So looking at the 10-minute time frame, you can see that we've completely closed the gap from earlier in the week, and in fact it gapped lower. It did rally, but was unable to overcome this prior level of support at the 81.75 level. So that 81.75 now looks to be resistance. We do have a rising 5-day moving average, so realistically it's very I think you got to be cautious in here more than anything. It's kind of, to me, in the short term, it's more neutral than anything. So that's the way that one looks right now.